So, something massive is going on in the world of finance. Gold, that ancient, timeless metal, is on an absolutely record shattering run. Today, we're going to dig into why that's happening and what it really means for all of us. All right, you've probably seen the headlines, right? So let's get right into it. We are seeing some truly mind-boggling predictions out there. The big question isn't just if gold's going to keep climbing, it's how high could it possibly go?
I mean, you've got well-known analysts like Peter Schiff throwing out numbers like $6,000 an ounce. Now, he does say that's in an extreme risk scenario, so think major economic chaos. But still, it just goes to show you how high some experts think the ceiling could be.
And get this, it doesn't even stop there. Bank of America has put out a scenario where in a best-case run, the price could shoot all the way up to $8,000 by 2027. We're not just talking about random numbers here. This points to a huge potential shift in the whole global financial system. Okay, so what in the world is happening here? How do we even get to numbers like that? Well, to really get it, you have to look at this powerful mix of events, this perfect storm that's hitting all at once. All right, let's talk about this perfect storm. We're going to break down the three big things that are creating this totally unique moment for gold. Think of them like three legs on a stool, all propping up this crazy price rally. So what's in this storm? Well, first up, you've got all the geopolitical chaos. Tensions are high everywhere, and when investors get spooked, they run for safety. Then you've got inflation. The US dollar since 2020 has lost a pretty big chunk of its buying power, making a classic asset like gold look like a fantastic way to protect your money. And finally, there's the Fed. The market is basically betting that they're going to cut interest rates. And when that happens, holding cash doesn't pay you as much, which all of a sudden makes holding gold, which pays you nothing, look like a much smarter play.
So who's actually buying all this gold? The answer is, well, it's pretty fascinating. It shows us there are two very powerful and very different groups driving this whole thing.
So you've got two major players in this game, and they're buying for totally different reasons. On one side, you have the world's central banks. Think countries like China and Poland. They are on an unbelievable buying spree. Why? It's all about de-dollarization. They basically want to rely less on the US dollar. Then, on the other side, you've got investors, from the big hedge funds down to people like you and me. For them, the story is a lot simpler. Gold is the ultimate safe place to park your money when everything else feels so chaotic. And this chart, wow, it just lays it all out, doesn't it? If you add it up, investment and central bank buying now account for a whopping 60% of all gold demand. This is a huge deal. It's a fundamental change where financial demand is just crushing the traditional uses like jewelry. Okay, so with all these big players, central banks and investors snapping up gold like there's no tomorrow, what do the experts think is going to happen next with the price? Well, the big banks, they're pretty much all on the same page. You've got JP Morgan, Goldman Sachs, UBS, they're all looking at prices in that $5,000 ballpark or even higher. And there it is again, that wild forecast from Bank of America with a high estimate of $8,000 for 2027. This isn't just one analyst being optimistic. This is a shared view across Wall Street. And you know what's really interesting? It's not just Wall Street saying this. It's also backed up by academic research. This chart right here, this comes from a forecasting model that uses cold, hard data to project the future. And what does it show? A steady climb, hitting around $5,500 by 2030. It's a pretty strong sign that this trend might be built on something more solid than just market hype. But hold on, it's not all sunshine and rainbows, right? No investment is a sure thing. And to get the whole story, we have to look at the other side of the coin. What could possibly send gold prices tumbling back down?
And first up, we have to talk about the new kid on the block, Bitcoin. Deutsche Bank brought this up. As Bitcoin keeps having these incredible runs, it forces us to ask a really important question. Could we see a future where digital currencies sit right alongside gold on a central bank's balance sheet? I mean, that's a thought that could change the entire game.
And here's the key thing to remember. All those factors pushing gold up, they can just as easily go into reverse and pull it right back down. If the dollar suddenly gets stronger, or if inflation drops off a cliff, or, and this would be a good thing, if major global conflicts get resolved, then the whole argument for holding gold gets a lot weaker.
And if you want a reality check, just look at history. It gives us a pretty powerful and kind of humbling lesson here. After gold's last huge peak back in the 2008 financial crisis, it didn't just dip a little. It went into a deep, painful downturn, losing almost half its value. And as this quote points out, it took over a decade just to claw its way back.
Yeah, just look at this chart from the last few years. It really drives the point home, doesn't it? Even in the middle of this amazing bull run, you can see these really sharp drops and a ton of volatility. The road up is never ever a straight line, and gold is absolutely famous for these punishing downturns.
So that brings us to the $1 million or maybe the $8,000 question. With central banks shifting away from the dollar and investors scrambling for a safe place to hide, are we watching gold get permanently revalued? Or is this just another massive supercycle, doomed to boom and then eventually bust, just like it has in the past? The answer to that is going to shape our financial world for years to come.